Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking equities and E-mini S&Ps still holding near the all-time high. 2550, a level we talked about on Wednesday after FOMC minutes. It was kind of the level we clung to. And I think that right now, as the market's kind of waiting for something to happen, it's interesting to point out that if we are going to see a significant decline, the first real support that comes in, we'll call it the 50-day moving average. It's about 70 handles lower, about 3% decline. So in order to see any kind of significant buying area, you need to see a huge move in E-minis. And I doubt that's going to happen. I think if we see any significant pullback, it'll be about 0.5%. And you'll start to see buyers come in with both hands. So I think right now, 2550 is the level. We're waiting for the next event, whether it be earnings, whether it be data, whether it be the Fed. But that's what we're waiting on. And volatility is telling us that the market is fearful of nothing. We've known that for a long time, where the VIX index is back below 10 comfortably and kind of holding there. Doesn't seem to be like there's any kind of weekend risk or there's any kind of Fed risk. I mean, even with a new chairman being potentially appointed next week, the market doesn't seem to have any jitters. So right now, smooth sailing, holding on the highs. What do we have ahead? Well, we do have earnings, and earnings could give us some little bit of day trade. Bank earnings started today. We had some stronger earnings come from Citi and JP, so that's going to set the tone, I think. We have more bank earnings next week. Obviously, with the FANGs, we'll be watching everything else that comes down the pipe, but right now it seems to be getting off to a strong start. So equities really have no reason to trade lower. We do get a key data point tomorrow, and that's CPI. Now, while it will be skewed a little bit because of the hurricanes last month, that I think that right now that's really what the Fed is hanging its hat on. Stronger inflation coming. If it does, rates are going to go higher. And likewise, if it doesn't, they may just use this month's number as a way to kind of say, well, that was the hurricane's fault. Let's wait until we get the October numbers. So I think right now that number is really only going to show more upside for equities. So right now, still holding on the all-time highs. Volatility is lower. Earnings are coming in better. So all seems to be going smoothly for equities. I don't see any real big blips on the radar, at least not until we get that Fed chair nominee. This is Todd Colvin coming to you from the floor of the CME Group.